Watch what's going to happen. Debt market's going to stabilize, stock market's going to go up. Oh no, Greg, you're going to be wrong on this one. I wasn't wrong. It's just so simple. You got to understand what they want to do. And this is about stabilizing the debt market now to keep the illusion of the market real. But it's not going to last. It's not going to last. They need another event, something bigger, to occur. And they will. Okay, but people need to be ready for it. And people need to be positioned correctly as well. I mean, look, what do I tell people? I feel like still commodities are the place to be. Super undervalued ones, in my view. Silver, my favorite asset of all time. Then would come gold. In general, commodities here are going to take off.
In a recent analysis by Gregory Mannarino, often dubbed the Robin Hood of Wall Street and founder of Trader's Choice, a critical examination of the ongoing debt crisis and its ramifications on the financial market and government policy is brought to the forefront. While currently in turbulence, Mannarino believes the debt market could ultimately find stability. He advocates for investment in undervalued commodities, with silver being a standout favorite, closely followed by gold. Fluctuations in gold and silver prices in May 2023 were primarily linked to debt ceiling talks. Gold hit a high of $2,048 per ounce on May 10th, but then dipped below the $1,980 to $2,000 support range, settling at around $1,960. Silver closely tracked these movements with a beta of 2 to 2.5 relative to gold. The concerning aspect of this scenario lies in the significant debt accumulation by the United States over the past decade. Congressional approval of trillions of dollars in spending has nearly tripled the national debt since 2009, with the gross federal debt reaching an astonishing $33 trillion. The U.S. government has been running an annual deficit of approximately $1 trillion since 2001, indicating that expenditures consistently surpass revenues. Mannarino's perspective centers on the idea that the prevailing debt issue perpetuates a deficit, and the current system relies on the continuous expansion of debt to sustain the existing way of life. He argues that a significant crisis is needed to trigger public outcry and facilitate the introducing of a new system. Furthermore, Mannarino suggests that adopting digital currencies may be more readily accepted if the existing system is allowed to develop dependencies and grow problems, eventually presenting the new system as a solution. Notably, approximately 24 central banks across emerging and advanced economies are expected to introduce digital currencies into circulation by the end of this decade, as indicated by a Bank for International Settlements survey. Before diving into Gregory Mannarino's interview, subscribe to our channel and give this video a big thumbs up.
Well, the debt issue is the greatest, forget about war, it's the greatest threat to humankind, and war is an outcome of the debt problem that we have here, and it's going to get monumentally worse because of that. The black hole of debt, it's the system operates, as you well know, in a perpetual deficit. It can never be made whole, nor is it meant to be made whole. It's just the debt must expand exponentially just to maintain the current environment, and they need to create in situations, crisis to crisis to crisis, so we can fund it, so they can sell it to the public. Okay, we have to send X amount of billions over here and X amount of billions over there and blah, blah, blah. This mechanism here must play out this way to sustain the current model. But again, what are we seeing? We're seeing the current situation being dismantled piece by piece. They're taking it apart. And what this is going to end up leading to is a much worse crisis down the line, because what do they need to do? They need an outcry. They need a public outcry on a scale that is going to shock the world to institute a new system. They throw these little bits of truth at us all the time, and I urge people to pay attention to this stuff because it's all hidden in plain sight. The Bank of International Settlements, for example, look at their vision for the future. Okay, the central bank of central banks, the BIS, their vision for the future is basically a one world digital currency. And that's where we're going. People are going to fight against it, but they're going to fight less if they create dependency on the current system, create a massive problem, allow that problem to manifest itself and say, hey, we have a solution. It's always the same: problem, reaction, solution. It will never change. And that's what they're building up towards now. All of this, none of it makes sense anymore. The distortions that exist across the spectrum of asset classes here, the stock market, the debt market, for which everything gets its value from. People don't understand, for the most part, that, the role that the debt market plays in this entire thing. The debt market sets the stage for the price of every single asset. This is why central banks have gotten in here and chosen to manipulate it and continue to do so now. So the stock market and pretty much everything else, the real estate, can be considered a derivative. In other words, it derives value from what's happening in the debt market. Artificially suppressed rates that we've had now since the last meltdown have created an environment that would not exist in a real world scenario here. This thing is just so beyond belief. And the artificial suppression of rates creates, again, a mechanism where cash makes its way into risk assets, comes out of things which should be going into massive distortions across the spectrum. And all of this is going to change. It must change. And it will at one particular time, but they are hell-bent on keeping the current system propped up for now. They had to stop the bleeding. Talking about the sell-off that we were seeing in the debt market, which you had mentioned just a little while ago here. They had to find a mechanism to stop the bleeding, period. This stage has been set from a long time ago. They're telling us this is some kind of an intelligence failure. Meanwhile, we're finding out there were all these warnings about it, all this stuff on the news right now. Okay, the stage was set, functioning system. I mean, just to put another perspective on this, and I urge people to do their own research, go to the Federal Reserve's own website. They'll tell you how much cash is actually in existence. It's $2.3 trillion of US dollars. The rest of it doesn't exist. It's not on the elemental chart. Okay, the near $34 trillion in debt that we owe, it's not there. It's just not, just like people's bank accounts. You think when you go to you open your website and you look at all those beautiful zeros on your bank account, it's not there. It's just digits on a screen. It doesn't exist. The whole system is imaginary, and it's going to get very real. That's my take on it.
Central banks worldwide are actively exploring the development of central bank digital currencies for retail use as a response to the diminishing role of physical cash and the increasing dominance of digital payments by private entities. Moreover, some are even delving into creating wholesale versions of these digital currencies tailored for transactions between financial institutions. However, Gregory Mannarino holds a different perspective. He believes that central banks, in tandem with global institutions like the Bank for International Settlements, are moving toward a global governance model without using military force, manipulating crises to their advantage. Meanwhile, global interest rates have surged unprecedentedly over the past year, with the Federal Reserve increasing U.S. rates by 450 basis points from near zero. The European Central Bank has similarly raised rates by 300 BPS, and many other regions in Europe and developing economies have implemented substantial rate hikes. This financial environment has led to concerns about the resilience of the global economic system. In this context, the BIS report also highlights the relationship between rate hikes and financial system stress, particularly in high private debt levels. Mannarino contends that the current global financial system is unsustainable and suggests it will eventually take a heavy toll on the world's population, potentially leading to severe crises with significant consequences.
I love it what they do. When people, they're told, oh, okay, the debt is X amount of $1 trillion, but this is just, the scope of this all, you have to factor in all the derivatives associated with it, the dollar denominated derivatives. It's in the quadrillions, but even that is all of that stuff is you can't measure it. There's no actual way to know what it is, but we know that number is astronomically higher than what they're letting us know. Everything when they float out these numbers at face value, you have to understand that there are layers and layers and layers and layers of derivatives on both sides, and it's just crazy to think about it. No one can know how big it is, but I can tell you it's not pretty. Well, I think the worldwide financial banking system is in a lot of trouble here. It's not just here in the United States. And I tell people all the time, stop thinking just in wherever area you live in the world. The system is run by the central banks, and they're all working towards a similar goal. The banking system around the world is insolvent, operates in a perpetual deficit. And again, the world is going to pay the price. The people of the world, unfortunately, are going to pay the price for this, and they're paying for it now. Some people are paying for it with their lives, and they will slaughter. And I've told people this for 10 years. They will splatter our blood and guts all over this planet to keep the current system going. That's all this is about. Our lives are worthless, and they're going to float out the politicians and then tell, oh, what a tragedy this is. Or a war is, but they know the game. I mean, all of them around the world, they know where this is going. They know how the game is played. Unfortunately, they can't tell you because they'll probably end up with a bullet in their head or something along those lines here. But well, that's just the way it is. Wow, this market is it's up over 200 points. That's on Bostic. When President Bostic came out today, and we called it. I called it this morning, right on my blog before it happened. I don't know if you saw it. I said, watch what they're going to do. Don't be surprised if they float out a Fed president. He's going to ease the market, talk the market higher. He's going to tell you everything's going to be okay, and the Fed doesn't need to raise rates. Oh, well, that's exactly what happened. I mean, we know their playbook cold. It's so obvious when you know their goals, what they want to do. What is this? What's the goal of every central bank on this planet? To be the lenders and buyers of last resort. They run it all. They run the economy. They run the financial system. They run the financial markets and everything. And the flow of information. I mean, this is the one world government that we've been told about. I mean, go to the BIS website. They're going to tell you their mission. And that's basically to conquer the world without firing a shot. Let us kill each other. And send out their smiling faces. I hate central banks, as you can probably tell. I mean, I don't think there's a person in this world that detests it more than I do. I think that these institutions are responsible for all of the theft of our freedoms and liberties, and people are unfortunately surrendering. They're throwing their arms up because they're being forced to do that. They're being made slaves to the system. Something I've warned about since I don't know how freaking long, and it's happening. It's right in our face. It's crazy. But I have to say this: very interesting times that we're living in. It's hard to deny that.
The BIS report suggests that stricter prudential policies can mitigate these risks and give central banks greater flexibility to navigate the challenging financial landscape. How will the evolving landscape of digital currencies and debt management impact our financial futures, and are we adequately prepared for the potential consequences of these changes? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.